Good afternoon, fellow traders. Welcome to today's webinar about trading the news effectively. This webinar today is directed more towards the beginners who have this idea of trading the news swirling in their minds for some time, but don't really know where to get started, what they need to pay attention to, what they need to consider when trading the news or attempting to trade the news. So this webinar is providing a few few ideas that you definitely need to keep in mind before you engage with trading the news. Okay, so while a couple of lost people are connecting to this webinar, let's just quickly go through the disclaimer. So bear with me for a moment. Contents of this material are provided by a third party, not Hot Forex, and are for informational purposes only and do not constitute investment advice. Hot Forex and Blue Sky Forex assume no responsibility for any potential errors, inaccuracies, or omissions in this material. Nothing in this communication contains or should be considered as containing an investment advice or an investment recommendation or a solicitation for the purpose of purchase or sale of any financial instrument. Any views or opinions presented within this material are solely those of the author and do not necessarily represent those of Hot Forex unless otherwise specifically stated. Currency trading may not be suitable for all investors as it carries a high degree of risk to your capital. Trading such products is risky and you may lose all of your investment. Past performance is not indicative of future results. Poor fill rates, expiry times, market volatility, and platform errors could result in losing trades. Before deciding to invest in currencies, you should carefully consider your investment objectives, level of experience, and risk appetite. You should be aware of all the risks associated with foreign exchange and currency trading and seek advice from an independent financial advisor if necessary. So with this out of Let's check today's agenda. I will quickly introduce myself briefly. We'll then take a look at two market types you will come across during your daily trading activities and how that relates to trading the news. We'll talk about how to trade the news effectively, what you have to keep in mind, and of course, at the very end, the dangers to avoid in news trading. And last but not least, as per standard, you can ask questions in the end. I'll do my very best to answer them as well. Okay, so I am one of the senior traders in Blue Sky Forex. We are an education, research, and trading group. We do teach various different strategies. We have developed our own arsenal of strategies that we use on a daily basis to trade. And of course, we also provide 24-hour trade support and analysis just to help FX traders to trade safer. Blue Sky Forex is presenting this webinar on behalf of Hot Forex in order to educate you and help you become highly profitable currency traders. So let's take a look at two market types now. The first is price action, which is AKA a trending market. It is more powerful because if you spot a proper trend that is tradable, then it's definitely fueled by significant news that is driving the price in a certain direction, and that can be tradable. Okay, and you can benefit from that significant trend a lot if you know what you're doing. You have definitely heard the expression trend is your friend, which is definitely true. So just definitely keep that in mind. Identifying it is a bit more difficult, and this is because you have to be aware of the news that is hitting the market. You have to understand what is behind the news, right? Behind the curtains, what's actually happening in the economics that is making the prices fluctuate so much. Okay. The second one is mean reversion, aka a ranging market. It's definitely more common. It is a lot easier to identify, and it can be profitable. Now, a ranging market is when the price is bouncing between the nearest support and resistance level. It's generally speaking moving horizontally. It's not going in either direction significantly up or down. It's moving in sideways, a sideways market essentially. Okay. Now, how these two market types are related to news trading. When you are trading the news, then obviously as significant news causes the prices to move in a certain direction. So you are looking at a trending market. Okay, you will need to have a keen eye in order to identify a trending market when the mean reversion market is switching to a trending market to news. Okay, there are a few tools that will assist you with it, make it easier to determine whether the price is starting to trend. And this tool that we use here for that is Bollinger Bands. Okay, I will show you what formation to look out for before trading the news and the trend. Okay, so a few things to keep in mind regarding news trading. When you want to trade news, you have to plan ahead. Okay, if you impulsively engage the market when you see price jumping up and down, fluctuating like crazy, and you check the calendar, you see, oh, some kind of news has hit the market, and you immediately look for trading opportunities, trying to see to what direction the price fluctuates more, and then just, hope for the best, then essentially you're gambling and there's really no point to it. Okay. It's the same if you go to the casino and go to the roulette and choose a random number and start gambling, right? Now, you don't want that. You don't want to gamble on the market because otherwise you will lose. The actual professional level traders, they are not gambling and they will win. Okay, so just leave that mindset behind. If you think market or trading is gambling, then you should really change your mindset right now, because you're not going to be successful. You don't want to gamble. So in order to be successful when trading in the news specifically, you have to plan ahead. The economic calendar that indicates what news are released throughout the month, it is planned month ahead. So before you start a new trading month, you already know when and what news are hitting the market. Okay. Now, this is where knowledge about different news comes in. You will over time understand what news are important, what news have a larger effect on the market, what news have little to no effect at all. Usually the calendars that you find in different sources, they already provide you with some insight what news might impact the market more and what news might impact the market less. Okay, so depending on the source where you are looking the calendar at, some of them use color code to provide you hints about the impact of the news. Usually red impact news are something that make the market move. Yellow and green most usually do not. Okay, so that is just one of the examples how the calendar providers give you hints about the impact of the news. Okay, now you will always need to understand, as I mentioned before, you need to understand what news make the market move and which one suit you the best. Okay, because all news don't necessarily impact the market the same way. Okay, so if you want to trade, the very biggest news like non-farm payrolls, these are usually the news that cause significant market moves. Then just focus on certain specific type of news and practice. So otherwise, if you attempt to trade all of them that indicate that should have high impact, you will be disappointed and you will make the learning curve a lot steeper. Okay. So when you are engaging the news trading, then try to select one or two different specific news that you would like to focus on, and then focus on them. Okay. Now, news very often are triggered during specific times of day. Okay. There are more significant news that are affecting US dollar and euro, and then these news usually hit the market during the London session very often, more often than not. There are some news that significantly impact the market that are issued in early US session, which of course is overlapping with the London session. Some news are during the late US session as well. Asian session is kind of a mix of everything. It always has been. Okay, a lot different mix of market types, different mix of news, and I personally don't really like the Asian session as much as I do like late US session and the London and US session overlap. Okay, because the Asian session often is a bit more unpredictable. Okay, so it changes really rapidly and changes significantly from day to day. Okay, trading the news, it is a price action strategy. Okay, so you're benefiting from those immediate, sharp, big moves. And you're also benefiting from a continuous, strong trend. So keep that in mind. It's all about price action. Of course, you also need to calibrate your charts accordingly. I will give you a couple of hints how to do that later and what tools to use. Okay, so as you already know, you now need to plan ahead your news trading sessions or opportunities. So if the day hits where a news is being released that you have already planned ahead that you want to trade, then also plan your trading session ahead for that certain day. Okay, you need to very closely pay attention to what time specifically the news is released. You need to just make free time. You need to be really closely eyeballing the charts when the news is hitting. You need to understand the volatility. You need to understand who has more potential to win, either bulls or bears. Okay. Usually 5 to 10 minutes, or from the start of the news up till 10 minutes, you will see the biggest volatility in the price movements, biggest fluctuations, because the market and then the investors are trying to make sense of the numbers. That is where the market experiences the most intense battle between the bulls and bears. It's really not smart at all to jump in straight away. I will go there and explain that a bit in more detail a bit later on. Just a heads up. As I mentioned, the calendar is planned ahead, so you have to plan ahead as well. Okay. Trade only the news that are marked as extreme high impact, like non-farm payrolls. I will show you a couple of additional examples that usually have high impact on the market. So make time to trade the news. So here is just one example of an economic calendar. You see the Bank of England minutes. This is a high impact news because really often Bank of England, for example, Bank of Japan, European Central Bank, all this kind of news minutes, so to say, where things are being discussed, like interest rates, etc. These very often have a really high impact on the market. Depending who is speaking, what is being spoken, some statements that are made that you don't expect might have such a severe impact on the market that us retail traders are completely surprised. Okay, all different statements are making the prices move differently and really unexpectedly. If you're not really into news trading, then you will anyways need to analyze the economic calendar for the trading month and the trading day specifically, and try to keep out from the market when there is high impact news. Okay, when interest rates are being discussed, and etc. Okay, now some very important news that will definitely make the market move. There are interest rate decisions. Okay, as I already mentioned earlier. These have extreme impact on the market usually. Then we have GDP, gross domestic product, and CPI, which is consumer price index releases. These two indexes, they do show the economic health of a certain region, certain country. So these really often can cause some waves on the price movements of the assets. So worth keeping an eye out those. Now, job data, as I mentioned, non-farm payrolls, in example, is a good one that definitely makes the prices move. Then we have the parliament votes, another thing definitely worth considering. And of course, now last but not least, we have the consumer confidence data, and there are some others out there, but these are listed as the most impactful news, okay, or events. Worth keeping an eye out for. Definitely choose one or two of them and start practicing. Now, how you can actually trade these news. Just add Bollinger Bands onto your chart. Really often, before significant news hits the market, you will see the price consolidating. Okay, we are dealing here with a 10-minute chart. For me personally, it's not the best example. I prefer 1-hour charts, but just for the sake of the example and to trade these breakouts from the Bollinger Bands, a 10-minute, maybe 15-minute and upwards chart time frames are actually quite sufficient in trading these. Okay, so a Bollinger breakout. You see the market quite ranging, and here you see significant consolidation of the price before the news hits the market, and you see a Bollinger breakout. Okay, so if you're using a 10-minute chart or let's say 15-minute chart, okay, you see the price significantly consolidating. This happens because there are a lot of investors also who have already made their trades. They have set their pending orders on the market, and they are not really making any immediate trades of the asset. So the market is quieting down, and they're waiting for the news to be released. Okay. So the investors are waiting for the news to be released to know the numbers and then trade. This is the reason you see consolidation in the price prior to the news. So then due to that consolidation, the Bollinger Bands constrict. You see a really heavy constriction here. They pull together, they converge, and then when the news is released, you will usually see a Bollinger breakout. Now, how to trade this specifically is when on the 15-minute charts, you wait until the very first candle closes outside the bonds, okay, that means usually either 15 minutes or 30 minutes from the news is already passed, okay? And if the price is strongly trending in the direction, if the news continuously still moving, if the next candle that opens here is starting to move in the same direction, then it's the moment for you to get into the trade and benefit from the trending movement upwards. Okay, just on the example here, you trade upwards as the Bollinger breakout happens upwards outside the bonds. On this example, it's really close at the top Bollinger Band. It's not actually closing outside. This would be the first candle closing outside. So if you have a bit of a higher risk appetite, you can already trade at the start of this candle. And just consider that this candle went outside the bonds and nearly closed at the bonds, or just a bit below. So that is completely up to you already. If you see already a third candle, or if the first candle already closed outside the bonds, and the second candle is significant, is starting to move in the same direction, then it's fine to initiate the trade as well. Okay. Now about the stop loss take profit. You can go ahead and set your stop loss just a bit below the lower Bollinger Band and set your take profit in the other direction with the same distance. That is one of the options. And it depends on your risk reward ratio. Okay. If your risk reward ratio is 1-to-1, then your take profit is the same distance from your stop loss. If you aim for a higher risk reward ratio, like 1-to-2, then your take profit will be 2 times the distance of your stop loss. It's better to increase your risk reward ratio after a while, just to allow yourself to earn more profits while maintaining the same risk per trade. Okay, now definitely keep in mind that don't overdo with the risk reward ratio, because if you set your take profit too far away from your entry price, then you will significantly lower the chances of the price actually hitting that take profit level, and the chances of you having to lock in that profit. Okay, so before your take profit level is reached, the market will reverse and hit your stop loss instead. So definitely don't overdo it. Keep it on a sensible level. I would say a stop risk reward ratio of 1-to-5 is a kind of a limit where you should go when you are an intermediate trader. When you are a professional, then obviously you will consistently analyze the market and let the profits run as long as your brain tells you to stop. If you notice some indecision settling in and a potential reversal, right? So otherwise, just keep a fixed risk reward ratio intact, and then you'll be fine. Okay. So yeah, you are trading a breakout formation when you are trading the news. Okay. And now, as I mentioned earlier, calibration. Definitely switch to candlestick charts. Candlestick charts are one of the easiest to analyze chart styles. So if you're using line charts or Renko charts, then I would highly recommend switching to candlesticks, because candlesticks, they do provide formations in themselves as well. you will see different candlestick formations that indicate a clear reversal, like dojis. You have shooting stars, hammers, etc. That already give you hints that the market is experiencing, or the price is experiencing, some indecision, and the price might soon reverse. Okay, so definitely use candlesticks. Add the Bollinger Bands onto your chart, a standard interval of period of 20 or 25, depending on the market conditions, and the deviation of 2 or 2.5. I sometimes use 2.5 just to find these higher peaks and lower peaks. Okay, so deviation of 2.5 is a bit better to find these very edges of the moves. Okay. When you are trading these news, it depends when you enter the trade, of course. If you enter a bit late, then a trade which lasts about 30 minutes is fine. If you want to think about the time, how long the trade should last, I would, of course, suggest you to focus on your stop loss and take profit levels. Which one you hit first, just close the trade, even if the trade has lasted only for 5 minutes. There are cases where the price is fluctuating so heavily, and if you still decide to enter the market, then you will, if you're lucky, you'll hit your take profit within minutes. Okay. Same goes for your stop loss. If you're unlucky, then you will also hit your stop loss within 2 minutes. If the market is experiencing some extreme volatility. So I would recommend focus on take profit and stop loss levels, but depending when you enter the news trade, it should not really last for more than an hour. Okay. So an hour is usually enough for all the news information to be digested, and the price has already moved significantly in one direction. So it makes sense to start looking for exits. Okay. And as I mentioned earlier, then within 0 to 5 or 0 to 10 minutes after news, you will see the highest volatility in the price usually. Okay, because the market is still making sense of the numbers. The investors are still making sense of the numbers. You will see a severe battle between the bulls and bears taking place. And which one wins, it's up for determination still. Okay, so you want to stay out after up to 10 minutes when the news is released, and then start looking for trade entries. Okay, keep in mind of the breakout formation with the Bollinger Bands, and if the price starts moving still in the same direction after 15 minutes, then it's a trade opportunity for you. Okay. And last but not least, just some dangers that are related to news trading. Something that we always want to mention. This is extremely important. Unfortunately, the industry is rigged with expert advisors and trading bots that are designed to not generate profits but generate losses on your trading account. Okay, so please be careful. If you want to try out a trading bot or an expert advisor, definitely use it on a demo account first. If it works on a demo account for 4, 5, 6 months, then you can consider switching to a live account, but still you have to be extremely careful and use low lot sizes. Okay, so please keep that in mind. It's really, really important. Don't get scammed. Now, some news events, some number releases that are important, they may be followed by conferences. Okay, and during those conferences, even after half an hour when the actual core details or core numbers were released, during those conferences, the attendees and so to say important political figures can make some extreme critical statements about either the numbers or the economic condition of a certain country, that their statements make even a higher impact than the actual core number releases did. Okay, so these statements can completely reverse the market once again, and you have to be really mindful of that. Okay, even if you see that, sure, after 30 minutes the market is still heavily trending in one direction, and you are have already earned certain amount of profit with that single trade that you made, then it's really recommended to um, be on the same level. What is, if there are any repercussions generated by any potential statements that are made during conferences that are following those news. Okay, in order to know or understand or scout out if there are any conferences held after the news, and if it is related to the news, and that already requires some fundamental trading, not trading, and then fundamental knowledge. So if you don't really want to scout out if there are any important conferences held after the news, then you should pay even more attention to the immediate price movements. Okay, if you see a spike in the other direction of the current trend, then you have to act quick. Okay, because something might have been said that caused that spike, and if already one spike happened, then it might continue. Okay. Now, when trading the majors like Euro USD, US JPY, and the cable, then there might be similar level news that have conflicting data, and these news actually theoretically make those specific currency pairs trend or move in the other direction. Okay. So let's say if you are planning to trade Euro USD and GBP USD, for example. Okay. If you have positive news for the euro and negative news for the USD, then obviously that makes the Euro USD price move in the same direction. Okay. But if you have negative news for the pound and negative news for the USD, that will cause quite a fight on that certain pair. Okay. So you will see the pair most likely experiencing heavy volatility, and the direction of the price movement is really not determined. Okay, so news that go against each other can cause the heavy volatility and really heavy indecision. Okay, so just keep a broader picture of the news calendar, see if there are any other news released or that is affecting the counter pair of the asset that you want to trade. So you would avoid being caught in a heavy volatility ranging market that is completely undecided for an extensive amount of time, if that makes sense. Okay. Now, last thing is that sometimes these numbers that are broadcasted in the calendars, I didn't mention before, but usually the calendar that you are observing for the news, they do, if not always, they do include the actual data of the news in the calendars as well. Some calendars release the data faster. Some calendars release the data earlier. But it has happened. It's relatively rare, but in some cases, the data that is marked down in the calendars or released in calendars, they seem a bit unrealistic. Okay, so these numbers seem too good to be true, or in other times you will see a complete large miss in the predicted values of the numbers that are, or the news that is released. Okay, and not recommended to directly start the trades, because there might be some adjustments made to the released data, and these adjustments may shoot the price in the other direction instead, or just the price moves in one certain direction with confidence, but then the momentum peters out really quickly, and then the price movement recovers. Okay, so if you see a really extreme miss in the data that's released, or you see numbers that are a bit unrealistic, they are too good to be true, then be extremely careful. Don't jump in the trade immediately, because these numbers or the data might be corrected or adjusted, and then the new data, corrected data, will be reflected, and that makes the movement exhaust really quickly. Okay. So these were the few things to keep in mind, and one really easy approach to news trading as well that we discussed on the webinar. Now it's time for questions. Don't hesitate to write them in the questions section, and I will do my best to answer. Okay, Thuzar is asking, what is the best time frame to trade? I'm guessing you're thinking about the chart time frames to analyze when you are finding trading opportunities for the news. Okay, if that's the case, then as the news trading will not take too much time, it shouldn't take too much time, because we're talking about really significant price fluctuations, then looking for entries on a 15-minute or a 30-minute chart is completely fine. Definitely use candlestick charts and Bollinger Bands. However, you should zoom out in the chart time frame to 1 hour and 4 hour charts to see if there is any potential major resistance or a support level nearby. Okay, because these extremely significant support resistance levels, they can play a really important role in the price movements, even if there was some significant news released and the price is confidently trending in one direction. But when it does hit the support resistance level, it has happened before many times that the support or resistance level is stronger than the news, and it completely repels the price. So definitely zoom out to look out for these significant levels as well. Okay, Paco is asking, is it advisable to use shorter time frames like 1 or 5-minute charts? I would never use 1-minute charts in FX trading. It's too much noise. Okay, 1-minute time frame contains too much noise for me to find usable data on it. A 5-minute chart is the actual very border of the chart time frame that I, in some cases, use if I really want to pinpoint my entry, but I usually refrain from using anything lower than 15 minutes. My favorite is 1 hour chart time frames. Okay, Tuzar is asking, So we should use Bollinger Bands as technical indicators to trade the news. Yes, Bollinger Bands are one of our favorite technical indicators in the MetaTrader 4 that we constantly use on our daily base, on our trading with daily basis. There are different Bollinger Band formations that we keep an eye out for, and that for some of our core trading strategies rely on. So Bollinger Bands are extremely useful. And this breakout formation that I mentioned earlier and showed a picture of as well, this is the way you can find the trading opportunities for the news trading and the breakouts. Olaf is asking, what calendar do you recommend? Hot Forex also has an economic calendar on their website, so you should check out those or check out that. There are a lot of different Forex themed websites and communities that have their own economic calendar. I'm not really sure if I can mention any names. I personally love the Forex Factory news calendar. There are a lot of different ones out there. Some providers have developed a plugin that you can plug into your MetaTrader 4 or websites or whatever. Okay, so a lot of different options out there. I just use Google search and you'll find a lot of them. Okay, Ronnie is saying that my friend makes over 60% of her trading account per news response with 3 bulls, but refuses to share. How can she do it, and what's the secret? I'm not sure. If she has certain strategy developed that is allowing her to predict the market moves after the news so accurately, then good for her. I'm sorry to hear that she's really jealous to actually share it. I don't see a reason why you shouldn't share a strategy with other fellow retail traders, but that's that. That's really not for me to judge. But yeah, she has developed something that is extraordinary, and that works out for her. It doesn't mean that you will not be able to have a strategy that is successful or accurate with news trading. It all mostly boils down to your experience in the industry and how much have you traded, etc. How much have you practiced, and so on. Okay. The market it's such an interesting thing that we as retail traders we only know a small fraction of it. Okay, we only know a small fraction what the actual big players are doing behind the curtains. Okay, we know that they have access to, or they have developed this kind of AI robots that are learning from the market behavior and constantly improving themselves, etc. And these robots, they are extremely effective as far as I have heard, but you can never see them with our own eyes. I mean, they are kept so secret, along with other different strategies that the big players are using in order to fool us into entering the trades into the other side of the market for them to simply profit from. Okay, so it's a difficult industry in a way. You just have to keep your head above the water and not drown, okay? Because there's a lot of sharks in the sea, and you are just just a small fish trying to survive and not be swallowed, right? So this is how we retail traders are in this industry. Donna is asking, yesterday there was a wild spike in the price movements on a lot of different pairs, but there was really no high impact news around that time. Was that in response to a non-listed news? For example, some tweet that somebody made or something? Yes, definitely. These things can definitely happen. So, for example, when President Trump says something foolish about not something foolish, but anything significant about some other country or the economic, everybody's constantly looking at Trump and what he's doing, what he's saying, etc., or any other important political figure. If they even make some kind of a remark in social media, it's not outlined that it will not move the market. Of course, it will move the market. Okay, if he says that um, he will do his best to lower the value of euro. If he says something like that, or if any other really important political figure says something like that, it will have immediate impact on the market. I'm 100% sure. Okay, and this kind of a statement cannot be planned ahead or marked inside the news calendar. So these things happen, yes. And also there might be some big players that just are selling off their assets, and that also can cause just significant price spikes that are completely unexpected. Okay, Adani is asking, apart from the Bollinger Bands, what are other indicators that can be used for news trading? Obviously, you cannot really use or shouldn't be using overbought, oversold based indicators like RSI stochastics. These are quite out of the question. But one of the indicators, just out of the back of my mind, an example, what you could use is ADX. That helps you just paint on its own area what strength the price has towards a certain direction. Okay, this is something, of course, you can also read yourself on the actual price charts, but just the ADX will perhaps provide that information or tell it to you a bit easier visually to read. Okay, so ADX is maybe something you can incorporate. And obviously there is always Google, and you can type into the search bar, best technical indicators for news trading, something like that. I'm 100% sure you will get hundreds of suggestions of some custom made indicators that help you filter out some news, what not to trade technically, etc. Sorry if I don't pronounce your name correctly, but Voisila is asking which period and deviation of the Bollinger Bands should we use? The standard period for the Bollinger Bands is 20. In a more volatile market, you can use 25 as the period. And the deviation, by standard, it's 2. Okay, that is relatively standard measure for the deviation. I sometimes tend to use 2.5 just to pinpoint these, higher peaks of the price movements, just to get a better entry. Okay. Charles is asking, is there specific properties of Bollinger Bands that are more specific to react to the market fast? If you modify the period of the Bollinger Bands, then it's reading or calculating its data from a shorter time frame. Okay, so if you set the period to 15, it will calculate its measurements from the past 15 candles of data. Okay, so that already makes the Bollinger Bands more sensitive also to the current price movements. So this is something you can use to modify. If the markets are extremely volatile, then I wouldn't really reduce the Bollinger Bands period, but just make it a bit larger for them just to be a bit less sensitive to the currently volatile market. Okay. Okay. Hyacinth is asking, is it more proper to trade sometime after the news? Is it not possible for the effect of the news to wane and then price to reverse when entry is made? The thing is that if you wait too long after the news has hit the market, then you might be entering at the end of the significant and sharp high rise movement already. Okay, so as per our recommendation, thinking about entering the market 15 minutes, maybe 20, 25, or 30 minutes maximum after the news has hit and the market has settled in a bit and the direction is more confidently moving in one direction, then enter in the market and actually benefiting from the main move, not any repercussions, because if you enter too late, you might be caught in reversal instead. Indeed, yes. Okay, Caleb is asking, when you do have a conflicting news on a single currency, an example, GDP to show a decline, but the unemployment data uh, was positive, how do you analyze that trade or situation? It's a good question. I would personally see how volatile these two different news makes the asset. Okay, because if it's really volatile and you have two contradicting news affecting one single currency pair, then it's smarter to stay out of the trading, because the chances of it going in a certain direction, they are lower. Okay, basically if you have one news telling the price to go down and the other news telling the price to go up, then you have a much severe fight between the bulls and bears, right? If you have a single news saying that the value of the asset will go up, then of course at the very beginning you will have this tug of war, because some want to buy and some want to sell immediately when the price has increased a bit, just to reap or scalp for these extreme quick profits. And then when these orders have exhausted or absorbed, then the price will start trending. Everybody will start buying, an example, right? So when you have two contradicting news, better to stay out. That's the short answer. Okay, Ryan is asking, if I fully avoid news in my trading and concentrate only on technical analysis, will I survive? That completely depends on you. You can be completely trashed even if you avoid the news and trade based on technical indicators if you do it wrong. Okay, so it's always completely up for the trader. If you completely avoid the news, this is what I did in the beginning, because I did once make a really dumb news trade. I emptied my account because I was too scared to get out of the trade as well. So after that, I completely ignored news trading completely. When there was some high impact news hitting the market, I simply didn't trade. I just shut down my workstation and walked away, did something else, and came back later when the market had settled. Okay, so this is completely okay. If you have a proper strategy that consists of proper money management, risk management, emotion control, etc., then it's completely probable to be consistently profit when you are only trading technical. I'm personally a really technical trader and I'm doing fine. I mean, this video is recorded and will be uploaded on the Hot Forex website under the past webinar section as well. I think this topic already is uploaded there from one of the previous presentations. So please log into your Hot Forex account, go to the webinar section and then choose past webinars, and you'll find the complete list of past webinars there. Alexander is asking, how will the Bollinger Bands inform what direction one should enter a trade at? Sure, let me just show on this example. When you have the Bollinger Bands constricting, one second. Okay, you should see it now. When you have the Bollinger Bands constricting, and when the news hits the candlesticks, they break out from the Bollinger Bands towards certain direction, and the direction where the candle is closing outside the bonds, that is your direction where you should be trading at. Okay, so if it's closing outside the bonds upwards, then you will trade upwards as well. Okay, Agusha is asking, what if sometimes the NFP comes out bad but USD goes bullish? Now, in this case, there are different factors in place as well. Most likely, post-released conferences where somebody just persuades that the NFP data was caused by these factual happenings, and we already have taken measures against it just to improve, etc., etc. So this already raises the USD into a positive note. So that might have been the cause. Paco is asking, do you ever use sell orders or buy orders to enter new trades? I'm thinking that you mean pending orders then, right? No, I don't use pending orders to enter new trades. I enter immediately based on the price action and what the price is doing. Ogusha is asking, can two or more bullish economic news release on a single currency pair with high impact change the trend of that currency. If I understood you correctly, then if there are more than one bullish news for a single currency, can the single asset still be bearish eventually or after some time? Of course, the price can always reverse, and there are a lot of different factors in play, not only the news, and some other factor can overwhelm just the news releases. Agusha is also asking, how long does it take for the market to settle after high impact news? That depends on the news and the severity of the news. Okay, we can't really predict that. A severe trend can last, anywhere from an hour or two up till several weeks. Okay, so that completely depends. It also depends on at what picture you look at. If you're looking at a monthly chart, then obviously you need to look at different news. If you're looking at the 1 hour chart, then you're looking at other news that might have caused a shorter time frame and these kind of significant trends. It all depends on what picture you're looking at and what is the news you're dealing with. Ola is saying that if Trump says he will make America good, does that make USD bullish or bearish? Can you give us an example of a foolish things that makes both bullish or bearish, the USD bullish or bearish? The thing is that if Trump says, I'll try to make the America good, I mean, that's a very vague statement, right? That's really not too convincing, and I really highly doubt that will make the USD move. Okay, no matter if he's a person of power, but if he says something that vague, that really won't have any effect. If with a total seriousness he says that he's going to, okay, I hope that's not not taken seriously what I'm about to say, but if he says that he will blow up the European Central Bank, even if he's joking, then this is a very serious statement, right? So I'm sure that the European Central Bank president would take this kind of a thing as a threat, even if it was a joke, and that would have a serious impact on euro, for example, even on USD, because Trump is a president of the United States, and he's representing the country, and also the currency that he's representing the country, that also will be affected. Okay, so yeah, I hope he doesn't say anything like that, though. That would be catastrophic. I think it would have catastrophic effects on the market. Okay, we are past the 1 hour mark. If there was any question that remain unanswered, don't hesitate to write an email to webinars@hotforex.com, and they will do their best to answer to them. So thanks guys for asking a lot of questions. It was really fun to read them as well. It was my pleasure to answer them. It was my pleasure to host the webinar today, and we'll see you next week. Take care, everybody. Happy trading.